Hi everyone, welcome to today's podcast on thoughts on the Japanese yen. So we will give it about 1 to 2 more minutes before we get the session started. For those of you guys who are here with us, if you have any questions with regards to the analysis done on Wednesdays, Thursday or Fridays, right, do put your questions under the questions chat. If you're watching a recording of it, feel free to reach out to me on LinkedIn as well. So we'll just wait for about 1 to 2 more minutes and we'll get the session started. Okay, let's start. So for today, we will be covering on thoughts on the Japanese yen. So for this, just a quick introduction of myself before we get the session started. I'm Lee Sing, so I provide FX advisory to institutional clients. I'm also part of the team that's recognized as the Technical Analyst Awards as finalists for the Best FX Research. If you're watching a recording of this, right, if you have any questions, do feel free to reach out to me on LinkedIn. If you're with us live right now, do put your questions under the questions chat. So I have both panels open, so you can just type any questions that you have with regards to this topic that we're covering for today. So just a quick disclaimer. So the information presented over here, it's not for investment advice. It's only for educational purposes. So this is the agenda that we will be covering for today. We will first be going through the yen situation. So what exactly happened with the Japanese yen and what is the outlook on that? So for those of you guys who have been following in the FX market, the Japanese yen has weakened to multi-decades low. So this is what we will be covering. We will also be covering the reasons that drove Japanese yen's performance, right? So what are the key factors involved? So this would include the central bank's monetary decisions, as well as comparing yens against its major peers, right? So the G7, namely your dollar, euro, Aussie, Kiwi, CAD, as well as pound. And then finally, we will also hop onto the charts just to show what are the key levels on Japanese yen that we can watch out for. So for this specifically, we will be comparing dollar against the yen, right? So the chart that we will be looking at would be on dollar yen. So what exactly is going on with the yen situation, right? Yen has, if you open up any chart that you have over here, right, on the yen, so it can be on euro yen, pound yen, or even just looking at the yen index itself, the yen has depreciated to multi-decades low. So the chart that we're seeing over here, the one at the bottom, so this is the Japanese currency index, the yen currency index, right? So this is the JXY ticker. So this measures the performance of the yen against 4 other major currencies. So the 4 currencies would be your dollar, euro, Aussie, and Kiwi. So if you take a look at JXY, just the start of this year alone, it has actually weakened more than 25%. So what this means is that when you compare the performance of yen against other currencies, you can see that yen itself has been reaching extremely low levels. And just this year alone, we are seeing this 25% drop. So in terms of the currencies that are chosen, right, this is actually based on the liquidity, right? So in terms of how heavily traded these currencies are, so generally it will be the majors, right, the G7, because these are the commonly traded currencies, as well as the real capital flows between the economies, right? So if they're actually engaged in any trades, and then finally also geographic diversification. So these are the factors that are taken into account when choosing the currencies to compare against the yen's performance. So next, we'll be taking a look at the key factors that are driving the yen. So the first one would be mainly the monetary policy divergence between Bank of Japan and major central banks, right? So simply put, what this means is that they are headed in very different directions. So think of it this way. In general, most countries, especially the major or the more developed economies, they are actually suffering inflation, right? So inflation has been hitting record high. So in response to that, what happens is that major central banks would have to raise interest rates, essentially make the cost of borrowing more expensive, make money less available in the market. And then this in turn would hopefully lower demand, right? So in this case, what we are seeing here is that most major central banks, because of in response to inflation, they are actually raising rates in order to tackle inflation. And because of that, you can see that compared to the Bank of Japan, right? Because Japan itself, they're not actually struggling with extremely high inflation, right? So in September, Japan's annual inflation stands at around 3%, right? So if you compare this relative to maybe like the US, UK, Europe, right, this is actually a lot better. So in this case, there is no real pressure for the Bank of Japan to hike rates as compared to major central banks. So because of this, right, this monetary policy divergence is actually causing the yen's weakness, because what it shows is that in general, the currencies would be less appealing. The yen would be less appealing as compared to other currencies. So the second factor would also be Japan itself as a net energy importer, right? So Japan imports a majority of their energy consumption, and because of this, and as we have witnessed with the whole Russian-Ukraine conflict, as well as energy costs, right? The cost of energy has been rising. So in response to that, Japan is also struggling with the higher cost of energy, right? And then as opposed to, for example, US, who also have their own supply of oil. In this case, Japan don't have, so they are actually reliant on imports. And then in this scenario, right, when the cost of energy increases, it also hurts their imports. So as Japanese yen weakens itself, right, when they actually import goods, right? So for example, if they import oil in US dollar, you can see that because of the yen's weakness, it's actually more expensive for them to actually import the goods in the foreign currencies. So that's another factor as well that has been basically driving the yen's weakness, right? So in this case, if the economy itself, it's also suffering from a weaker yen, making this imports that they have more expensive. At the same time, right, the yen itself, it's also weaker. What this shows is that the economy would not be as appealing as compared to maybe other major economies. So previously we mentioned about inflation, right? So if you take a look at inflation itself, if you see inflation in the major economies. So for example, in the US, annual inflation is at 8.2% in September. So what this means is that prices have been rising stably year on year, right? And if you compare September to the previous year, it's actually increased by 8.2%. And coming up tomorrow as well, we do have the CPI data due. So for tomorrow, it's expected to stand at around 7.9% in October. So this is something that markets will be watching heavily on, because the CPI would reflect inflation, right? And inflation is the main cause of Fed's interest rate decision right now. So 7.9%, if you look at it in a general scheme of things, it's still far ahead compared to your Fed's target range of 2%. So what this should show is that Fed should be on course to raise rates, and markets are expecting about a 50 basis point rate hike in December's meeting. So just last week, right, they actually delivered a 75 basis point hike in November's meeting, right, for the Fed during the FOMC. Oops. Let me just adjust this, right? And then, of course, record high inflation in major economies. So we're not talking about just the US. In Europe and UK itself as well, right? They are experiencing multi-decade high inflation. But the difference is that in the US, it's more demand-driven inflation, whereas in the Europe, UK, because again, they're also net energy importers, so they're also suffering from the supply constraints. So when there's a lack of supply, and also the Russian-Ukraine conflict, all of this actually was on the cost of energy, right? So it drove energy prices higher. And as a result, these countries tend to suffer even more, right? Because what happens is that this inflation, it's not demand driven, right? So you're not seeing a growth in demand. If you take a look at the economic data, domestic growth is still weak, but at the same time, these prices, the higher cost of goods, are actually driven mainly by the supply, the shortages. So other factors that we have, right? So if you take a look at inflation again compared to other major economies, inflation in Japan is relatively muted. So if you see their core CPI, right? Core CPI in September, it's at around 3%. There are other factors involved as well that it's also causing the yen that's driving the yen, right? So one would be on government regulations. So government regulations itself, it actually imposes gradual price hikes. So in response to that, right, even though energy cost has been rising, and Japan itself is also an importer of energy, because of this regulations to stabilize prices, right, we can see that this is one factor that has been affecting the yen. Other factors that is also causing relatively low inflation in Japan, right, would be your negative interest rates. So for the longest time, Japan has been adopting this negative interest rates at around negative 0.1% for 6 years. The idea behind this is that the Japan economy itself, they have been struggling with deflation. So essentially, instead of prices rising year on year, right, so this it's actually healthy for the economy, because if price rise and if prices are higher next year, right, then it encourages spending. So if they want to buy any goods, they are likely to buy it now instead of waiting for a year or 2 years later where the price of goods are cheaper. So in general, it's good to have a healthy level of inflation. But in Japan's case, right, slightly different. So for their case, they are battling more with deflation. So because of that, they have the uh, loose monetary policy, essentially to encourage spending and to encourage borrowing. So this is another factor that actually affects the yen, right? And also inflation in general. And then finally, the yen's weakness, as we have covered, right? So we compared the monetary policy between the different central banks. So you can see that the interest rates differentials itself. So what we mean by this is that you can see that central banks have been hiking rates. So Fed itself, right now, markets are also expecting terminal rate to stand at around 5%. So essentially, this is a interest rate where Fed would pause its tightening cycles. So in this case, with the interest rates differentials, right, when central banks are hiking rates, it's actually more attractive to hold on to foreign currencies as compared to the yen. So to put it simply, if you think of the money sitting in our bank, right, if you're to hold dollar, for example, it will give you higher returns as compared to holding the Japanese yen. So this is also part of the reason why people are actually buying other currencies and selling the yen, right? So if we recall on the basics of FX trading, currencies always come in pair, right? So when you buy one currency, you sell it with the other. So in this case, this is also part of the reason why you can see that when interest rates in US rise, whereas for Japan, it's relatively the same, right? Negative. What happens is that it will push the dollar higher. So which is also the reason why if you take a look at the dollar yen chart, dollar yen itself has rose to, I believe the highest is around 150 mark, right? So that's 150 mark was one of the benchmark that the market has been watching. And then finally, in talking about central banks, it's also the Bank of Japan's intervention. So recently in September, right, Bank of Japan actually intervened once, basically to prop up the yen. So how they do it is that they sell the reserves that they have, right, in foreign currencies and essentially buy up the Japanese yen to shore up the current currency. So that was the first intervention since the previous Asian financial crisis, right? So ever since that was actually the first intervention that we saw in September. And there's also speculations that they actually intervened in the market the second time, which is the reason why we saw the movement in the dollar yen recently, right? So that but in that case, right, it's just speculations and no confirmations on it. So Bank of Japan's intervention or central bank's intervention in general will also will also affect the currency's movement. Okay, so next we will be covering on the key levels on Japanese yen, right? So for this, we will touch on the dollar yen specifically, right? So for dollar yen, we will be going through the charts. At the same time, we'll also be highlighting levels that we want we want to keep a lookout for the Japanese yen, right? And if you guys have any questions with regards to dollar yen or even any other requests or any questions regarding this whole yen situation, right, feel free to ask, put them under the questions chat. Okay, so for this, I will hop on to the charts. So let me just bring out TradingView and we will take a look at dollar yen together. Okay, so this is the chart on dollar yen. So let's just go through the higher time frame first, as always, right? So on dollar yen, you can see that if you're on the monthly time frame, dollar yen has reached about 145, right? So the 100 it's like it actually went slightly beyond the 150 mark. So 150 mark was one that was closely watched because this was a level that most participants believed that the BOJ would intervene, right, to stop the yen from falling even lower. So in this case, you can see that on the monthly time frame itself, the last time dollar yen actually stood at 150, this was at around 1998, which was the Asian financial crisis. So you can see that currently yen, it's testing this level. We saw that slight pullback on the monthly time frame over here. If you take a look at the monthly picture itself, right, you can see that there are no clear support levels. The next support level that we have is actually this level here, which was the previous resistance turn support area. So notice this region where we saw this strong price reaction of this region once, and then again over here where we saw that hesitation before price pushed up. So the next time price actually revisits this region, right, if we do see this area, price coming into this region, this would be the support level to watch on the monthly. So with that, let me just highlight with respect to the most recent candle, what we have here. And we will go down to the smaller time frame, essentially to do the same thing. So essentially, this is what we have, right? So this is actually the monthly picture on dollar yen. If you take a look at it on the weekly, you can see that there is this slight retracement over here, right? So we saw dollar yen retreat from its previous high. So this high, it's at around 152 level. So dollar yen has been pushing lower, right? And part of this, it's also because of the idea. So dollar yen itself, right? Any actions from the Fed or Bank of Japan or inflation data in general would also cause the price movements. So for dollar yen itself here, you can see that the recent move that we have over here on the dollar's weakness, this is also partly attributed to speculations that Fed might ease its pace of tightening, right? So in September and November, we have been seeing 75 basis point rate hike during its FOMC meeting, but going into December, right, we might be going into a 50 basis point hike instead, right, and then slowly to ease tightening because it does take time for this monetary policy to take effect as well on the economy. So right now, what we're seeing is that if inflation is starting to slow down, we could see Fed withdrawing or actually slowing down its tightening cycles. So this is part of the reason why we saw that weaker dollar here. But if you can see that in general, the recent trend on dollar, it's strong, right? So it's been bullish, it's been pushing higher, and a big part of it is really because of the Fed. So hawkish Fed has been delivering interest rate hikes, and because of that reason, it's been pushing the dollar higher. And if you compare the real interest rates on the dollar as compared to maybe like your yen itself, you can see that dollar is also much more attractive as an investment. And finally, what's also important, it's actually the performance of the dollar, right? So if you take a look at the dollar, I mean the US economy, right? So US economy has been relatively resilient here, right? So maybe just before I hop onto the chart, just on dollar yen itself, you can see that US economy has been relatively resilient. So it wasn't really mentioned in the slides here, right? But US economy has been relatively resilient in terms of the domestic growth, and employment has also been healthy, right? So it's a healthy level. We see that the tight labor market is still extremely tight. So all of these reasons, it's actually putting pressure on the Fed, right? So among all of this, you also have high inflation rate going on. So what this shows is that you have because of all these reasons, right, it actually puts pressure on the Fed to raise rates, essentially to curb inflation. Okay, so I have a question, right? So Japanese central bank going to stop the silent and dangerous intervention that keeps pair with yen prone to surprise price jump. Okay, so I would say that in general, right, because intervention, it's not seen upon favorably as well. So as long as the yen, it's going to weaken further, right, that might happen again, right? So yeah, so that's on this. But you can see that the first time they actually came up to show up the yen was in September, and they acknowledged to that. But the second intervention, it was pretty much more of just speculations. So yeah, so that's on the yen itself. Okay, and one more thing that we can keep a lookout for, right? So in terms of the intervention, you can also actually monitor the prices, right? So just take a look at the dollar yen. So yen in general has been on pretty strong spikes. Okay, so let's take a look at the dollar yen chart, right? So the difference between the Japan's economy as well as US is also part of the reason why it's actually driving the yen's weakness, right? So while US economy is relatively strong, you have inflation that's high. It's also driving the Fed to push rates higher, whereas for the yen, Japan's economy itself, right, because they also rely on energy imports, and right now energy prices are rising, so this is going to hurt Japan's economy as well. Okay, so in terms of the silent intervention, right, to be really honest, I don't have any idea when they will stop it, but I would say that in general, if yen is extremely weak, right, the intervention might come again just simply because one is there might be political pressure, right, and second thing is that if yen weakens too much, it actually hurts Japan's imports, right, because if yen is extremely weak, buying or importing goods from foreign currencies, for example, like your dollar, all of this, right, it's going to be expensive for the Japanese, so because of that, right, there might be pressure to shore up the yen as well. On the bright side is that if you have a weaker yen, right, it helps to boost export competitiveness. I don't think the currency devaluation is intentional, but essentially when yen is extremely weak, it makes buying yen goods or buying Japanese goods in general cheaper, right, in foreign currencies. But of course, with that, right, it will also hurt their neighboring countries, right? So for example, like China, Korea. Okay, so yeah, so that's more on the fundamentals for the yen, right? So if you take a look at dollar yen on this level itself, you can see that we saw the recent pullback, and the speculations of intervention here, which we saw that sharp drop here, right? So essentially, this could be one. And when price pulls back, so this is currently on the daily level. So if you take a look at the daily level, you can see that currently prices are actually testing a support region here. So how so? You can see this region where there's this accumulation and the price actually broke out of it. And then right now we're seeing that pullback back into the region again. So this is one area to watch, right? And this is actually the, you can call it the support or demand area that we have on dollar yen. This is the current level. So likewise, if you take a look at the Fibonacci retracement on this move itself, so for those of you guys who are familiar with retracement levels, again, you want to identify the impulse move and then take that pullback. So on the impulse move alone, you can take the low and the high, right? So taking the Fibonacci retracement of the low and high, you can see that currently prices are actually sitting on the 61.8% retracement here. So this is the region, right? So this area, it's the first area to watch. So you can see that prices came in over here, it tested this region once, and then again over here. So this is one that we have, right? Another thing that we can do is again check your Fibonacci extensions. So Fibonacci extensions are zigzag patterns. So in this case, you can see that this is the zigzag pattern, and these are the 3 points that we are taking here. So again, if I have to project a Fibonacci extension, first point, second point, and third point, right? Likewise, I want to open up the key levels. You can see that the 61.8 extension, the one in blue, it's lining up with this area as well. So this is on the daily picture, right? So if you go down to the 4 hours picture, you can see that currently prices are sitting within this zone. Okay, so currently prices are sitting within this zone on the 4 hours picture. What we do have over here is that you can see that once price reaches into this region, the first thing you want to watch on the smaller time frame, on the 1 hour over here, it's that you can see that currently prices are still holding above this below this resistance area. You can see how price chopped around here, right? So my view on this is that as long as dollar yen holds below this region itself, so this stands at around the, let me just take a look at this, right? So this is at around 146. So as long as price holds below 146, we could see more downside. And the next region that we have, it's actually further push down to test this area here. So that's one, right? But once price breaks above this, we need to keep in mind that because we're still holding on the support region itself, right? So you can see bearish, again, if you take a look at market structure, still bearish market structure coming in. Currently, prices are holding below this resistance area. We saw multiple tests of this region. If you go to the 30 minutes time frame, you can see this as well, right? Where price came in, tested this region a few times. And then right now, what we have coming into this is that if price breaks above this, this now becomes a support resistance turn support area. So you saw how price held below this region, and then when price breaks above this region, this is the area to watch for further long. So in terms of fundamental dollar as compared to the yen itself, right, dollar, I would say that we're still more bullish on dollar, and also at the same time we are expecting the Fed to deliver more rate hikes. Likely that rates are likely to peak in March 2023, right? So markets are taking a look at around 5% terminal rate. So we still have some way to go before we reach this level. And also a big part of it is dependent on the economic data as well, right? So tomorrow we are taking, there'll be CPI data that will be out. So CPI data will essentially reflect inflation, and inflation has been basically the main driver for the higher interest rates that we're seeing in this current market climate. Okay, so that is the picture on dollar yen, and these are the key levels to watch. So in general, 146 would be the level of resistance to watch, and 144.80, it's the level of support. So within this range itself, right, we could see dollar yen push and test this region. So it could push lower over here, right? So once price breaks this area, I think we could see more upside on dollar yen. That's one, but currently you can see that coming into this region, we're still seeing bearish market structure with the recent moves, right? So until that changes, the technical outlook on the smaller time frame is still relatively more bearish. Okay, so on the 1 hour. But if you're on the higher time frame, you can see that it is currently sitting on the support region here. Okay, so we have covered, right, just a brief summary of what we have covered so far in this session. So we briefly touched about the outlook on the yen, right? So what's going on with the yen, what's the situation like? And also you can see that the prices, so against different currencies, right? If you take a look at JXY, which is essentially the currency index measuring the yen's performance against major currencies like your euro, dollar, Aussie, and Kiwi, in this case, right, they have actually pushed to multi-decades low. And we also looked at a few factors that drove the yen's weakness, right? So the main one will be the monetary policy divergence with central banks. So what this means is that you have central banks on one end, right? Your Fed, RBA, Bank of Canada, Bank of Australia, they're all raising interest rates to fight inflation. Whereas Bank of Japan, right, they're relatively, they're maintaining the negative interest rates. So that's one, which makes it a lot more appealing to hold your assets in foreign currencies as compared to the yen. Right, so that's part of the reason that has been driving the capital outflow, right? Selling the yen for other currencies. And the other is, of course, the net energy importer, right? So Japan as a net energy importer, their status itself, it's also going to hurt the economy when your price of energy starts going higher. So we see the same case with Europe and UK, right? A big part of their inflation is driven by a lack of supply. As compared to US, where it's more of demand, right? So demand is healthy, your labor market is strong, that's in the US, so it justifies a rate raise, right? The economy is able to take that kind of effect, whereas not so much in the Europe and UK, right? So you have higher risk of recession and stagflation coming in. So what stagflation means is just a case where you see prices rising higher, but demand is not able to keep up with it, right? So you have rising prices, but at the same time, this rising prices itself, it's not reflected by demand, but rather these prices are being pushed up because of a lack of supply. So in this case, when growth does not match up with the rising price, it can result in stagflation. And then also finally, we have we talked about inflation as well. So just comparing the kind of inflation in Japan as well as in the major economies, right? So for example, in Japan, right, they have been for many years struggling more with deflation, whereas in major economies right now, right? So just in September, Japan's inflation in September is around 3%, whereas in major economies you're looking at around 8-9%. So inflation is also one of the factors that's been driving that. And then finally, we look at a Bank of Japan's intervention. So intervention in the FX market, it's not looked upon favorably, right? So generally, they want to let supply demand dictate the foreign currency moves. But in this case, you can see that the first intervention came right short. This was actually after the Asian financial crisis, which was in 1998. So in September, Bank of Japan stood in, right? They actually essentially sell some of the foreign reserves to buy up the yen in order to stop the yen's weakness, right? So that it's more of the intervention side. Okay, so in response to your questions, I have a question. What kind of net energy commodities impact Japan, right? So in general, most of it, right? So for example, take a look at natural gas, oil prices, right? So any energy price that rise itself, that will affect the economy, right? As long as they import. So yeah, so they import a majority of it because by themselves they don't really produce much of their energy consumption. Okay, so anything with oil prices, natural gas, right? So those are some of the commodities, or rather energy prices that you have. Okay, so I hope that answers your question, right? And then we also have the key levels. And then we also covered the key levels to watch on dollar yen. So essentially, we're looking at around the 144.80 support region, as well as 140. Let's see, so 145, 146 resistance, right? So we're looking at around 144.80 support and 146 resistance on dollar yen. Okay, so with that, we have come to the end of today's session, right? So if you guys have any other questions with regards to the yen itself, right, please feel free to put it under the questions chat. If not, we will be covering tomorrow's session. So tomorrow's session will be more on the educational series, right? So we are following up with last week's session on beginners trading series. So we will be going through that. So this one would be covering more on trends and also how we can apply the basic concepts in technical analysis. Okay, so if you guys have no other questions, right, that's all for today's session. So thanks everyone for being here with us today, right, and we'll catch you guys tomorrow. Okay, so I see that we have no other questions as well, right? So yeah, we have come to the end of today's session. If you guys want to check out the schedule, right, you can go to vantagemarkets.com/webinars in terms of the topics that are covered. And also, if you have any other questions, right, do email us at support@vantagemarkets.com. Okay, so thanks everyone. Stay safe, trade safe, and we will catch you guys again soon.